Formosa Petrochemical has posted less than expected first quarter earnings, and it's warning of even worse result in quarter two. At its Thursday shareholders meeting, the refiner reported pre-tax profit of 5.3 billion NT, which the chairman called it unsatisfactory.
The firm said the global oil prices have not bounced back as expected. As a result, quarter two profits will be even worse than quarter one, and oil prices may only return to $80 a barrel toward the end of the year.
Our first quarter pre-tax profit was 5.3 billion NT, which we don't find satisfactory.
The four major subsidiaries of Formosa Plastics Group will all hold their shareholders meetings in late May. Leading the way was Formosa Petrochemical, with a Thursday conference convened by Chairman Chen Pao-lang. Although the firm staged a turnaround in the first quarter to make more than 4.43 billion NT in profit, the chairman said he was unsatisfied with overall performance. He said that due to international factors, the recovery in oil prices was not meeting expectations, and so profits in the second quarter would not be better than the first.
Many changes are taking place around the world, and none are under my control. So we will post losses in May. It will be unlike January, February, and March, when we made profits all 3 months. Q2 will not be better than Q1.
In the first half of 2022, Formosa Petrochemical's exports grew amid Russia's invasion of Ukraine and a greater imbalance in supply and demand for oil products. But in the second half of the year, inflation, lockdowns in China, and economic stagnation delivered losses. Over the entire year, Formosa Petrochemical posted consolidated revenue of 848 billion NT, up 36.8% from 2021. Earnings per share stood at 1.51 NT. At Thursday's conference, the company announced a dividend per share of 1.1 NT, a stark difference from last year's 3.8 NT.
This year, the impact from inflation and the Russia-Ukraine war remains. We have to stay especially cautious.
As for the outlook this year, Chen reiterated that demand for petrochemical products had not recovered as expected. In addition, profit margins were falling for previously better performing products like diesel and aviation fuel. He said that the company would be flexible in its operations while working to strengthen its fundamentals and competitiveness.